So he decided to rent the house to me at $5,000. So I spent 3 weeks to turn around the asset, to turn around the place at 6 room. 2 weeks later, all the 6 rooms were filled up, and we achieved a total
Wow.
rent of around 10,800. That was at the point in time I realized that, hey, actually, if the landlord were to use the same concept as mine, then they could have
Mm-hmm.
achieved a better yield, and the tenant is also willing to pay additional $100-$200 to have a good and
Mm-hmm.
safe community. So one thing lead to another.
3 years later.
So 3 years later, here we are. We have around 1,200 rooms now.
All right, folks. Welcome back to another episode of the Monk Realty Show. Today we have with us Eugene Lim from the Assembly Place. Hi, Eugene. Welcome to the show.
Hi, thank you so much, AJ, for having me today.
Fantastic. For the sake of for those people in the audience who don't yet know you, why don't you give a quick introduction about yourself and then the Assembly Place?
Hi everyone, I'm the founder and chief executive officer of the Assembly Place. So we are a co-living company based in Singapore. Currently, we have close to 1,200 live rooms with another 300 rooms up in the pipeline. The Assembly Place was founded in June 2019. So it has been a great, awesome 3.5 years since we started the company. Thank you.
Fantastic. And what led you into co-living?
Okay, so I was in real estate for the past close to 20 years of my career. So real estate has always been a big part of me since I graduated from, in fact, even before university, after high school, I was already involved in brokering of real estate. So how I came across why I decided to venture into co-living back in 2019. It was really more of a social experiment more than anything. Back in 2019, the rental rates in Singapore, the rental yield was not great. So you have a lot of high net worth individual that buy real estate in Singapore, but they couldn't achieve the kind of yield that they want to achieve. However, on another spectrum, Singapore being a very open market, we have a lot of foreigners, expats, that actually come to Singapore to work. But however, even though Singapore being a first world city, there's not so much of affordable accommodation or safe accommodation. So we have a gap whereby we have tenants, friends from India, friends from Malaysia working in Singapore that want affordable, good quality accommodation. But yet, the landlord wanted very high rental yield, but they couldn't achieve the rental yield. So what happened was that I decided to rent a house in Orchard Road from my ex-client. He is an Indonesian, so he's in Singapore for many years. So what happened was that one day we were having lunch. He began to tell me things like, "Hey Eugene, Singapore real estate, you cannot invest in Singapore real estate because the rental yield is so low." He said he bought the Inter Terrace for close to 5 million. He was only asking for $6,000, but there was no taker. So we're having lunch on that fateful afternoon. What happened was that the next day, I was on the way to work, taking the lift up to the 30th floor. Then I was in the same lift with my colleagues they were from the finance department. So most of my ex-company finance department, they were actually Malaysian. So they were complaining about their landlord switching off their air conditioning on the weekend, barge in their room at 7 a.m. So I was very curious. I was asking them, hey, how much do you rent for your room? They say they are paying around $800 per room. Then immediately I asked, is there attached bath that comes with it? They say no, it's just a common room in a public housing estate. That was when I was very shocked. Then immediately I thought of my lunch with my ex-client. I immediately called him and say that, hey Pak, why not you rent the house to me, because I want to run a social experiment. So he looked at me, he said, okay, it's okay. What do you want to do that for? I said, I just want to run a social experiment to create affordable housing, yet to try to achieve yield from the point of a landlord. So he decided to rent the house to me at $5,000. So I spent 3 weeks to turn around the asset, to turn around the place at 6 room. 2 weeks later, all the 6 rooms were filled up, and we achieved a total rent of around 10,800. That was at the point in time I realized that, hey, actually, if the landlord were to use the same concept as mine, then they could have achieved a better yield, and the tenant is also willing to pay additional $100-$200 to have a good and safe community. So one thing lead to another. So 3 years later, here we are. We have around 1,200 rooms now.
Oh, that's a fantastic origin story, and it's a really good example of like an entrepreneur who knows the industry really well and stumbling across the right opportunity right within the industry. And I think 2018-19 was such a pivotal moment for the co-living industry in itself, because all across the world a lot of really good companies have been set up during that time, and it's great to know that your story begins there as well. Talking about the core point that you mentioned, which is around yield, right? And so much of real estate just revolves around how much yield you can get out of an asset. And a lot of times, like, I speak to people from outside the industry who feel that like higher yields or like higher rents are not really a good thing, right? Like for the industry, like because like it makes it unaffordable for customers, etc. But I try to make the case that, hey, like if the yields are more attractive, more capital comes into the market, and that kind of like has its own stabilization effect, right? Like more capital, more housing, as long as the government is conducive to it, and that kind of like has a very long-term positive effect on the industry. But just touching upon the topic of yield, we see various different yield rates in different parts of the world. In Singapore right now, for let's say a strata unit, and if the landlord just wants to rent out a 3-bedroom apartment, what's the expected yield like, and how much do you think the yield could be if they opt for a co-living model?
Okay, so typically, if a typical landlord just rent out a unit on his own, he or she could, potentially achieve around 2.5% yield. If they can achieve 3% yield, that is considered good. But if you convert it to a co-living play, probably you can hit additional 1 to 1.5%. Reason why I say that is because in the assembly place, out of 1,200 rooms that we have, 50% are run via management contract. So when we run via management contract, we run on behalf of this landlord. We are able to achieve as high as around 5% yield for some of them. But however, even though the rental yield in today's market is high, we all see the news that Singapore rental has went up significantly. But however, the net return back to the owner is not great either because of the high interest rate. Before COVID or during COVID, the interest rate in Singapore is hovering average around 1.5 to 1.8%. But today's the interest rate can go as high as 5%. So even though if the landlord has increased rental by 50 to 80%, a huge chunk of this actually goes back to the high interest environment. So these are things that a lot of tenants they may not understand. It comes to a situation whereby the landlord has got no choice but to increase rental. If not, they can't even pay off the high interest mortgage in today's environment.
That's an interesting point, because I think all across the world, in India, the interest rates going into the pandemic were around 6.5% on average, and now it's at about 9.5%. It's increased like significantly, right? And we're seeing, of course, like similar trends all across the world, and as a consequence, rents have shot up, right? Like 30%, 40%, 50%, like in most parts of India, but we're seeing this in Dubai as well. I'm hearing from friends that it's kind of happening in the US as well. So the rents have kind of like spiked, but of course, there's a very clear underlying reason that the borrowing rate for landlords and investors has simply gone up as well. Is that the primary driver for the high rents in Singapore right now, or are there other factors that are driving this as well?
Okay, basically there are two key factors. Of course, one of which is the obvious, which is the high interest rate. Secondly, the landlord also make use of this tight supply environment to increase the rental rate. Because the past 3 years in COVID, a lot of construction got delayed. Projects that were supposed to be completed 2 years ago came to a halt. So there's a tight in terms of supply. So, and when the borders open, you got an influx of students as well as foreigners who came back to Singapore to work. And when that happens, there's really a supply crunch in today's environment, and coupled with the high interest rate as well. So all these amount and add up to the high rental environment today that we are seeing. But we foresee that our Singapore rental market is almost at its peak right now. I don't think it will go back all the way to the pre-COVID level. I don't think it will go back to that level, but I don't think also it will go as high as a jump compared to last year, because over the next 6 months, a lot of the private residential projects are going to be completed. So once all these residential projects are completed, then you have more supply, you have more choices for the tenants as well.
Interesting. And one of the factors that I notice a lot about the Singapore rental market is that it's primarily stratified units, right? Condos which are like handed over to MCST for management, and then like a lot of the units come up for rental. Are we seeing now that there are more consolidated rental housing stock? I mean, are we seeing condos or even let's say like smaller apartments which have maybe like 50 rooms or 100 rooms, which would have normally just been a hotel? But are these kinds of like housing stock getting created for the purpose of long-term rental alone?
I guess for those projects that just completed, because in Singapore itself, our URA, our planner, over the past few years has also tried to regulate the kind of sizes that a real estate developer can build. So gone are the days whereby a property developer can build one singular block, all are one bedroom, all are studio apartment. So they need to have a good mix. I think our planner did that well and did that strategically to ensure that we do not cause social disharmony to the streetscape in certain part of Singapore. So imagine you have one full block that is all studio apartment, then that estate will end up having different kind of tenant coming in and out of the housing estate. So I think what we want is to really build a very robust community within the neighborhood. You have a mixture of families, you have a mixture of young families, multi-generation family, as well as probably tenant. So back to the question whereby do we really see a singular building block whereby it's all fully purpose rental? I don't think so. I don't really see that, because for the typical 3 and 4 bedroom, a lot of Singaporean buyer who buy is really buying for their own stay. And because of our Singapore real estate taxation structure with the additional buyer stamp duty, I think gone are the days whereby one Singaporean or a family will want to buy 3 to 4 property because the taxes are simply too high. In the past, Singaporean will buy a second property, third property for the purpose of rental. But these days, you have to think very hard because the taxes are simply too high. And all these taxes, you can't take a bank loan out of it. All these are 100% equity that you have to pay to the tax department. So we foresee that the new supply, they may elevate in terms of the demand crunch for the rental market, but the prices will not really go down because the supply for the rental is not going to shoot over the roof. There will not be an oversupply in terms of for the purpose of rental, because a lot of Singaporeans who buy are really for the purpose of upgrading and for the purpose of for owner occupier, not so much of rental.
Let's talk a little bit about hotels, right? Something that we noticed during the pandemic was that a lot of the hotels were not being utilized as much, right? Because like travel was not happening as frequently as it was happening before, like so many travel restrictions, and a lot of co-living operators started taking over hotels and operating them as co-living spaces. Is that I know that trend was happening in Singapore as well. Is that happening? Have you done that yourself? What has been your experience so far?
Okay, so for Singapore itself, during the pandemic, because tourism has perpetually fallen down to zero. So, but what happened was that our Singapore government did a lot to help our tourism industry. So a lot of the hotel were converted to actually quarantine hotel and stay home notice hotel, and that's when the government actually paid the hotel owner, for the for utilization of their space, and that kind of tied through a lot of the hotel owners during the pandemic. So back to the question of some co-living operators have actually started to pivot, turning over hotel spaces to run as co-living. Yes, we see a trend. Even for the assembly place, currently we are running 2 co-living hotels right now. So, however, what is the reason why we decided to go into the hotel space as well? So the reason is also because our Singapore regulation, like for our typical co-living residential space, the guidelines stated very clearly that the minimum stay for any tenant for our co-living space under residential is a minimum of 3 months. As we begin to scale the business, we realized that there's a lot of our members start calling us and say that, hey, our friends are visiting us when the borders open, but they're not here. They're not going to be here for 3 months. They're here only going to be 1 month. Do you have any co-living solution for them? But the answer is I do not have, because the minimum stay is 3 months, and for the assembly place, we are very sure that we do not want to run afoul with the law. We will stick with the rule of the game. That's when we decided to took on our first hotel in Mayo Street. That's only a 23-room hotel. So why 23 room? Because it's something that we are first time doing it. We do not want to expose ourselves by running a 300-400 room hotel. So a 23-room hotel, what we did was that we turned it around. We create communal spaces in the hotel itself, meaning to say that 1 or 2 of the room we convert it to be a communal lounge area, so that members can actually have a co-working space as well as a co-sharing space within the hotel. So when we turn over that space, we are flexible. We can rent 1 day, we can rent 1 week, we can rent 2 weeks. So that's the reason why we go into this space. And we did the first hotel late last year, and it proved to be successful. So what happened was that we opened our second co-living hotel earlier this year, and we also took on the third one, which is a service apartment, which we just opened last month, which is the former YMCA Metropolitan along Stevens Road. So now for the assembly base, we got different accommodation class. We got co-living residential, we got co-living hotel, we got co-living service apartment. We also got co-living
apartment.
Yes, service apartment as well.
Which one is the hostel in this?
Okay, the hostel is in Perak Road. So, but we started. It's a 186 bed hostel. So it was completed last year October, and we have achieved 100% lease all the way, and it's fully occupied until this year November.
Oh wow! This is for a hostel, is it?
Yeah, a hostel, meaning to say that each room you have 4 to 6 beds.
So is it like a traveler's hostel or is it like a worker's hostel?
It's a traveler hostel.
Oh wow! Okay, that's fantastic.
Yeah. So that space itself won the best co-living space under Asia Property Award last year. So we spent a lot of money to do up the architecture. The internal communal space is beautiful. We spent around 1.5 million to spruce up the space. So I would say that it's the most premium co-living hostel in Singapore, because all the hostels in Singapore, there's no attached bathroom. It's all communal bath. But this space, every room comes with an attached bath.
Oh, that's fantastic. I really love the concept of kind of like co-living / like the hostel experience overall, because especially when you're traveling, that's kind of when you're really looking for like-minded people to do stuff with, especially when you're a solo traveler. And I've done that many times, like especially when you're in places like Europe and they already have a really good hostel infrastructure, and you just meet like so many nice people, right? And there's like so many reasons to kind of like bond with the people that you're kind of sharing the space with. So really nice to find that, like you're playing all across the spectrum, anywhere from 1 day of accommodation all the way over to a year or 2 of lease. Do you face any operational challenges when you're having a business which does hospitality, midterm as well as like long-term accommodation?
Okay, so we are also learning every day as we scale the business. The co-living business is actually part operational business. So currently we have close to 20 operational staff full-time, consists of our full-time housekeeper as well as our handyman, our technician. Handyman that can fix the light bulb, clear the choke. They are electrical trained, plumbing trained. So we got around close to 20 of them, managing around 1,200 rooms. So what we have learned is that over the years, when we manage the co-living business, when it is a hotel or service apartment, we will tend to outsource it. We outsource the operation and the cleaning services. Okay. So, but if it's our co-living business, whereby we do once or twice a week cleaning, then we will use our own staff. But hotel and service apartment is different because daily cleaning is essential.
Yeah, Yeah, and wouldn't your business also change from a marketing perspective on like where you market your properties and how you get the tenants, or are these channels the same for both short term as well as long term stays?
Okay, so what happened is that for hotel, what we do for a hotel is that, example, our first hotel is 23 room. We will always try to rent out 10 of them via our own platform. The 10 room will be more for longer stay, 1 month and above. But for those one daily stay, we still have to depend on the OTA like your booking.com, Agoda. We still go through that platform. So we are happy with that model because if we rent 10 rooms out of 23 rooms for long-term stay, that will lower my operational costs because I do not need to do daily housekeeping and I do not need to pay the OTA fee as well. So it's all through my network. So everything is cheaper and more efficient. However, once 10 rooms I rent out based on long term, I'm around 45% leased out. So the rest of the 55%, actually I can call the prices. I can call the prices I want via the OTA platform. So we
Nice, very
kind
nice.
of
And
model.
would you recommend this kind of like a hybrid rental strategy for other co-living operators as well?
Okay, it really depends. Like we also did our own numbers. If you run a hotel full-fledged, if you run a hotel full-fledged on a daily rate, your rental is actually always higher. Your revenue will always be higher than for the long term. But for us, because we know ourselves, we are not the Accor, we are not the Marriott. So we are a co-living operator. So we always tell ourselves that we take our time to build our brand. Most importantly, that we do not get ourselves underwater. So we are always happy to say that all the hotels that we are running now, we are profitable. So I mean, for the assembly base, we have always been profitable since day one, and we are cash flow positive. So that's something that we always hold high regards to. That we do not we are prudent, you know, in the way we run the business because at the end of the day, every business that we do, we need to be profitable.
That's
So that's how we do ourselves. Yeah.
There were a couple of years in between when if an entrepreneur started saying things like profitability and cash flow, everyone would look at that entrepreneur and be like, are you crazy? Like, why are you saying
Yes.
words like this? But then now I think we're back to a world where sustainability in businesses are starting to get encouraged once again. So that's like really nice to know that the company is profitable, and that's such a good sign of strength, right? Like, especially to come out and say like that you're profitable on a cash flow basis, so you're in control of your own destiny. But for those operators in the co-living industry who want to possibly finance the business through external capital, what would you suggest to them? Like, are there any capital pools available? I know that the VC industry is not very hot on co-living and the operator in businesses in general. Or what would you suggest to new entrepreneurs entering the industry?
I will always suggest for the entrepreneur in this industry that the co-living business is a real estate business. It's a property management business. We are not 100% tech business. So I think this is something that the entrepreneur and the founder need to realize that we can position ourselves as a quasi tech company, but we are not a tech company. So at the end of the day, it's the real estate that matter. We must run a tight ship and nurse it back to health because the co-living business in today's environment with the high rental market, there is profit to be made. So, but we all know that the margin can be very tight. So I think it's very important to realize that the VC market, the capital market is not great, compared to pre-COVID days. So it's very important to nurse the traditional business back to health to make it profitable. So who knows? Probably when there's a lot of hot money coming in 2-3 years down the road, you can share the pain whatever story that you want. But at the end of the day, till that day come, I think sustainability is still key. Yeah. So for us, a lot of people are shocked that, including my operational team of 20 of them, the whole company in the assembly, we only got 30 full-time staff running 1,200 rooms, including myself.
Wow,
We only got 30 of us,
that's
including
fantastic.
our 20 full-time housekeeper as well as our
Wow.
technician. There's only 30 of us. So
Wow.
so so we run a very tight ship. When I was when I was managing, when the SME place, we have 600 rooms. So there's only 8 of us running the business. So so when COVID hit, it didn't really affect us. I think it's also because during the first 2 years of the growth of the SME place, our rooms are all via management contract. So we were asset light. So we do not take position. And it helps because myself and my team, we are in real estate for a big part of our career. So personally, I was from Knight Frank, heading the residential department. So we know what are the leases that you can touch, what are the leases that you can't touch. So the worst thing for our business is that once you enter into a bad lease of 5 year, it's a bad lease. It is a bad marriage, and that bad marriage will cost you, it will cost your bottom line significantly.
Right. Right. No, that's very interesting. It's very commendable that you have been you've been able to convince so many landlords to get in on a management contract, because most landlords, especially when a company is starting new, they prefer to have like a fixed lease, right, with the operator, and you can like kind of like resell it for a higher price. Did you face that challenge as well when you started, or were landlords more open to management contracts right from the beginning?
Okay, I was very blessed. I was also very lucky when I first started the business. It helps because I was in the industry for 20 years, so I know a lot of real estate developer. I know a lot of family office who own a lot of real estate. So I think in our industry, reputation is very, very important because Singapore is such a small country. We are like a city. So the industry is so small, the market is so small, everyone know each other. So it helps when I first started out, there was a lot of all these family office kind of individual that actually believe in me. So when I approach them, I say that I'm just a startup. I don't have money to even pay your security deposit. But if you trust me, I manage your space well. So and when I took on the first management contract on a row of shop houses, the team did very well for them. And once the word spread, they will talk to their friends because the circle is so small. And so one thing lead to another. I managed to, the first 300 rooms were all management contract. Yeah,
Oh,
so
wow.
that helps us a lot. So I was very, very lucky. And when we did the fundraising back in 2021, that was our first round of fundraising. And since then, there was no need for us to raise because most of the cash still sits in the bank because we are still cash flow positive. So the people who invest in are all the real estate veteran in the Singapore real estate scene. So it helps when they are invested, they also introduce a lot of client to me.
That's very nice. So it's I think like that has been your proxy of sorts to build the business without raising capital, in the sense that you've just been leveraging your connections from before, right? Like to kind of help you acquire at least the supply on one side, and especially in a market like Singapore where supply is so constrained. Once you have the supply, it's relatively easy, to get the demand. I think a lot of operators who don't come from the industry and who don't have some of these relationships, they try to raise money in the hope that money can actually attract the supply to potentially come to them. And they would either do that by offering, let's say, like fixed lease agreements, and they need financing to kind of, they need like funding to kind of like finance that fixed lease commitment, or just the using that money to use on marketing and brand building in a hope that would once again get the trust of landlords, right, to come and hand over their property to them. So it's really interesting that like you kind of managed to leverage your connections from before to kind of move into your business. We're kind of running out of time, but I do want to like touch upon one final topic before we wind up. This is broadly around sustainability, right? And this is something that we've been thinking about quite a bit. We've been speaking to a lot of our customers about. What we notice is that the commercial real estate industry, the office real estate, and let's say the retail real estate industry, they are broadly in a place where they're thinking about sustainability very deeply. And this is kind of happening at the corporate tenant level, where really large companies are refusing to lease out commercial real estate unless the owner of that real estate has shown a commitment towards ESG, right? And they've shown a commitment towards carbon neutrality and moving towards carbon offset and things like that. Are you seeing any such movement in a similar direction in co-living or in residential rentals, or is it too early for retail consumers to kind of like think about that right now?
Okay, I think it's too early for retail investor to think about that. I think the ESG portion in Singapore happens more of the commercial space, not so much of the accommodation space. So I think more of sustainability will be more of probably the retail function will be more of the eco-friendly, a sustainable product that we use, that we put inside the software of our space. So because the younger generation today, they are more sensitive to saving the environment, going green, ensuring that we don't waste, we don't have any wastage, zero use of plastic, everything is all being recycled. So I think from the retail sector, it's more towards that, but it's too early, to look at the ESG part of things for the retail, especially on the accommodation play. But what we can do as an organization, that what we have started to do is we have recently pilot one of our hotel at Virasamy. That one is the first co-living sustainable hotel. That means so what we do is that the shampoo as well as the body wash that we use are all plant-based. It's actually plant-based. Yes. So we partner with Cloversoft. So even our laundry area, they have to use our detergent pots. It's all plant-based. And the toilet paper and the tissue paper we use are all from bamboo instead of trees.
Oh, nice. That's very nice.
Yeah, so we just launched that one. We just launched this collaboration it costs us a bit more. It costs us more to use this product, but we feel that as an organization, that is the first step that we should do. So we just launched this partnership 3 weeks ago.
Oh, that's fantastic. That's a really good example of how operators can also influence or can kind of move towards sustainability. Love that you're doing that. I've loved everything that I've heard today. Of course, I'm well aware of what the team is up to at the assembly place. Wish you all the best. I hope to maybe reconnect and have you back on the podcast maybe a couple of years from now, just to see how things have progressed. But thank you so much for your time today, and good luck with the business.
Thank you, AJ. Thank you so much for having me. I look forward to host you when you're in Singapore.
Oh, definitely. Thank you so much.
Thank you.